Hi guys, welcome back to my channel. In today's video, I'm going to go through with you guys how to trade SPX and SPY. So if you follow me on any of my social media accounts, you will notice that I have been trading SPX quite frequently. It is my go-to recently to trade. I do like how the price action is. It's easy to trade in my opinion once you get the hang of it. So because I've been trading it so much, I have been getting a lot of DMs and requests and questions on how to trade SPX, how to trade SPY, if you can trade SPY with SPX, what to watch while you're trading SPX. So I'm going to answer all of those questions for you guys here in this video today. And yeah, I hope you all are able to take this information and really be able to apply it to SPX and SPY. So I'll go through that with you guys today, and I'll show you what I look at when I'm trading it and how I chart it and so on and so forth. So yeah, let's just go ahead and get started. So for SPX is the S&P 500 index. So what it's really doing is just putting a value to a basket of stocks, and that is the 500 stocks that fall under the S&P 500. SPY is the exchange traded fund or ETF that tracks the S&P 500's performance. So if the S&P is up, SPY is up, S&P is down, SPY is down. So you can track how the market is doing overall by watching SPY. With SPX, you cannot purchase shares. So, and I got this question a lot on my Instagram, is how you can watch level 2 and time and sales on SPX. You cannot. It does not have any volume because there are no shares traded on it. So you cannot see anything. You cannot see level 2 time and sales because it requires volume. You can't see the VWAP on it, and you can't see the volume indicator on it, and any other indicator that requires volume to be implemented, you won't be able to see it on SPX. You can see EMAs, moving averages, so on and so forth. You just cannot see anything that requires volume. SPX does not pay dividends. SPY pays dividends quarterly. SPY is tradable like common stock. You can trade shares on it. You can buy shares, short it, whatever you want to do. You can trade it just like any other stock that you want. There are shares, there is volume. You can see level 2 and time and sales on SPY versus on SPX. And then SPX is approximately per contract around, if you buy the same strike, same expiration, around the same strike and expiration, it's about 10 times the value of a SPY contract. So that's why I wanted to touch on SPY in case you guys have smaller accounts and are not able to trade SPX. You can always trade SPY and implement this same strategy onto your SPY calls or SPY puts, okay? So it works the exact same way. I have watched it. And like I said, the students in my Discord, if I'm trading SPX and they have a smaller account or they don't want to deal with the volatility of SPX, they will trade SPY, okay? So I also just want to mention, I personally like to trade SPX more than SPY. I don't like to trade SPY very often because it does move a lot slower than what I'm used to. I'm used to trading stocks like Tesla, Amazon, Nvidia that move in big increments, have the volatility behind them, and the premiums move very sharply as well, versus a stock like SPY or Apple that move very slow. I'm not very used to that. So that's really the main reason why I trade SPX. All right, so when you're charting SPX, you want to chart it the same way. I always use a top-down approach, so I want to use the 3-year weekly and work my way down. You want to chart the highs and the lows. I have a charting video already, so I'm not going to go through every single level here and chart it with you guys, but I will just show you guys. Let's start on the daily time frame and work our way down. So on the daily time frame, actually, SPX is at daily lows, so we are going to chart the weekly time frame here. So you want to chart the high and the low. So I'll chart this 21.86 and then this 48.18. And what I've noticed with SPX is it moves in $5 to $10 increments. So your 5 to 10 point increments are going to be your key levels to watch on SPX. And then of course the 10 point increments, the 50 and 100 point increments are going to be your psych levels on this. So as the stock moves up here, this is on an uptrend here, creates a high, pulls back to right around here where it wicks. So I'm going to chart the bottom of this wick. It's around 41.15, and I'm going to extend this to the left, and it's close to where this consolidation happened. I'm also going to chart the bottom of this wick, which is around 40. I'm going to chart this at 40.55. All right, it's just going to stay at 40.56 now. 40.55 because that is a psych level and it's the bottom of those wicks here, you can see. So I'm going to chart it at 40.55. That is where it made a low of day, I think, on Friday as well. So I'm going to chart this here for you guys too, just because SPX is at yearly lows. This will be helpful for everyone. So I'm going to start from the left hand over, and right here you can see there's a level of support at 27.50. We're going to put it at. On the higher time frames, I always round out, on the higher time frames, I always round up to the nearest 5 or 10 point level. And then on the smaller time frames, I'll get really into the nitty gritty and see. So this is 30.30. I'm going to chart it at. Okay. So it's consolidated between this 27.50, 30.30. It has a small level of support here at 28.40, it looks like. So I'm going to chart that as well. And then after that, it breaks out of the 30.30 and goes on to an uptrend. Right here, it pulls back at 33. I'm going to chart this at 33.40. And then it has another level at 33. I'm going to chart this at 3,400. Okay. Pulls back at 33.40 down to 32.20. Okay. So I'm going to chart that. And then once it touches that 30.20, rejects 3,400, and you can see it made a strong downtrend into low, weekly lows. I'm not going to chart anything in between here. I'm just going to see where it moves from there. So after it bounces off of 21.92, it looks like, creates an uptrend, pulls back here, 27.50, uptrend, rejection of the 32.20 that we had charted earlier, pulls back to 30.30 level, bounces, and then it breaks out of the 3,400 here, creates a new high, 34.15. I'm going to chart this. Okay. And then the wick at 35.90. Pulls back to 32.20, pulls back 32.20, continues up. Right here, we start to see some resistance at 38.50, pulls back here to 37.20, and then this wick to 36.65. Okay, like I said, on the higher time frames, I round up 5, 10 point levels. Once I get onto the smaller time frames, the intraday time frames, 15, 5, 2-minute time frames, then I will really get into getting it very accurate. But right now I just do the 5 and 10 point and kind of eyeball it. So right here is 39.50. Don't overcomplicate charting. It's really not complicated at all. You just follow the trend, see where the trend ends and pulls back, and those are going to be your levels of support and resistance. Okay, trend, uptrend, pulls back, has a level of resistance, 42, probably 36 here, and then pulls back to 40.55. Now, as SPX makes its move down into the next week, I also do just want to chart right here as well, because I want to zoom in, and it has a level at around 39.68, has a level at 39.15, and then this wick here at 38.86, 85, wherever you want to chart it at. This candle here at 38.18. And the only reason I'm zooming in right now and doing this is because it's at weekly lows. So if it does make a move down, I have levels on its way down. If I don't do this, I won't have levels as it's making its way down, and I won't be able to chart it properly. And you can see here also has a level here at, I'd probably do this at 40.35 to be safest, and then it has a small gap to 40.20. Okay, so you can see where it gapped up on these two candles. All right, and then I do this all the way down. Now, when I'm trading SPX, there are two types of trades that I like to implement on SPX. And actually there are three. So I'll go through those strategies. The first strategy I've already went through with you guys is the gap fill strategy. SPX tends to gap up or down if the market makes a significant move up or down. So you can see right here, this was a gap that it created. So you can see from the previous days, this was 5.4, it gapped down. So the pre-gap level is going to be 4,300 because that's going to be this right here. And then the post gap level where it gapped down to 42.70. Now what you will see is sometimes when you chart your stock all the way down, or when you chart SPX all the way down, what you will see is, say for example, this gap down to like 42.66, 67. And then you had a level at 42.70, okay? I would take the entry at 42.70. I would not take the entry at 42.67 because you risk the stock rejecting at 42.70. Even if the gap starts at 42.67, you wait for it to break the psych level. You don't wait for the 42.67, you wait for the 42.70, okay? But for this example here, it did the gap does start at 42.70 anyway, so that would be your entry point, and you would take this all the way up to 4,300. Now, as you take this up to 4,300, if you have any levels of resistance from 42.70 to 4,300, those are going to be profit targets. So for example, 42.80 would be my first profit target, and then 42.90, and then 4,300 my ultimate profit target. Your first and second profit targets, usually I always recommend at least having two. You take 80% at the first profit target and then continuously take scale out of your position in your second and third profit targets, or you take 50% here and continue to scale out. With SPX on the gap fill, how I usually do it is I'll probably take around 50% off of my first profit target, and then I'll hold the rest into the gap fill because it is a high probability play, and usually if the market has sentiment, if the market has direction, and it's not choppy, and SPX starts to fill the gap, 90% of the time it fills the gap all the way through, okay? That's why it's my highest probability setup and why I like to trade the most. So on the opposite hand, say you take another trade on SPX and it's not the gap fill and you want to scale out, you scale out 80% at your first profit target and then continuously scale out into your ultimate profit targets, okay? So you always want to scale at least 80% at your first profit target. Always take off at least 80% at your first profit target on SPX because it could potentially bounce anywhere depending on the market. Okay, so that's the first type of strategy that you can implement is the gap fill. Now, the second strategy that I implement on SPX is just high of day, low of day breakouts. So if it breaks out of 43.07, you would take calls. If it breaks below 42.62, you would take puts. So the break of highs and lows is what I implement into any stock that I trade, and SPX moves the same way. If it breaks high of day, you trade it into the next level of resistance. If it breaks low of day, you trade it into the next level of support. So those are the two simplest strategies to implement with SPX. Now I will go through another strategy that I use. Whoops. Okay, before we move on to the second strategy that I'm going to show you guys, I just want to mention one thing. When I trade SPX, I am not watching SPX. I'm not monitoring my trades on the 1 minute time frame. I monitor my SPX trades, whether it's a scalp or a day trade, on the 2 minute and 5 minute time frames. If I'm scalping it, I will be watching it on the 2 minute. If I'm day trading it, I will be watching it on the 2 and 5 minute. I do enter my positions on the 1 minute time frame. I do enter and exit on the 1 minute. So for example, like if it were to break 42.36, right here, I would enter as the 1 minute held above 42.36, my resistance level. However, after that, I would monitor it on the 2 minute time frame. I would not monitor it on the 1 minute, and you can clearly see why. If you watch SPX on the 1 minute time frame, you will get shaken out. These candles where it's a strong push down or a strong move down will shake you out. And I have seen people get shaken out. But if you look, so you can see here, stock pulls back, almost breaks the 9-day EMA, still holds, and then right here it breaks below 9-day EMA. So looking at this, you could potentially see a reversal. However, if you look at this on the 2 minute time frame, stock breaks out, and throughout this entire uptrend, SPX holds a 9-day EMA. And what I've noticed with SPX, if SPX is holding the 9 EMA on the 2-minute time frame and continuously pulling back, retesting the 9 EMA, pulling back, retesting the 9 EMA, the trend is still in place. Okay, even if it's on the downside, it's trending below the 9 EMA, retest, continues down, retest, continues down. The 9 EMA is a solid level or indicator to use as a stop loss also on SPX if you are day trading it, okay? I wouldn't necessarily use it if you're just scalping and you're entering and exiting, entering and exiting. However, if you're day trading SPX, the 9 EMA is a great way to watch the overall trend of SPX. That being said, please don't watch SPX. Do not monitor your trades on SPX on the 1-minute time frame. You will 100% get shaken out. If you switch to the 2-minute time frame, this was a game changer for me. It completely organized the chart way better for me. I do not get shaken out of SPX. I'm able to hold my trades longer. I'm able to scale out properly and follow my trading plan all the way through without getting shaken out of any pullbacks like this. Because, and also I forgot to mention, this video is so unorganized and I really apologize. I also forgot to mention that SPX is 0 DTE every day except for Thursday, and I believe that they're going to make Thursday 0 DTE as well. So another reason why I watch on the 2-minute time frame is because since SPX is 0 DTE every single day but Thursday, every time that it pulls back like this, you're going to see a sharp decline in your premium, and people tend to get shaken out because of that. So 1, don't watch your P&L. 2, if you watch it on the 2-minute time frame, I'm telling you, it will completely change the way that you day trade SPX. Day trade any stock. I have day trade or even scalp any stock because I've also been applying this to Amazon. I've been applying this to Tesla, to Nvidia, to Facebook, and it works way better, especially stocks that are a little volatile like Amazon, Shop, Google. Google also looks really good on the 2-minute time frame. It really, really cleans up the chart. So definitely start to implement the 2-minute time frame into your trading strategy. So that's another way that you could day trade SPX. Obviously, if you are going to day trade it, make sure that you have a trading plan. Make sure that you have an entry point, your target profit, and as long as it holds a 9 EMA and it's breaking out and holding your stop losses on its way back, you are good to stay in the trade, okay? Now, another way that I like to trade SPX, and I'm gonna show you guys this as well, and I actually took this trade on Friday. All right, so now that we went through that, I'm going to go through another strategy you can implement when trading SPX or SPY. So this is 5-5. So another strategy you can implement into trading SPX and SPY is with ES. So obviously you would have to watch ES while you're trading SPX and SPY regardless. I always watch ES at all times. I am always watching ES to see where ES is at, what levels of support and resistance it's approaching if I am to trade SPX. If you are not watching ES, you're going to struggle with trading SPX. Now, say, and this is a trade that I took, I broke it down on my Instagram, but I'm going to go a little bit more in depth. ES was breaking out at 42.50, okay? That is a key psych level on ES. Below 42.50, I had no other levels of support on ES until 4200, which means ES has a 50-point drop, has room to drop 50 points. In turn, SPX will also have the same movement, okay? So I entered SPX, I think it was below 42.47. I wanted to day trade it, and my target on this was 4200. I did have profit targets in between at 4230 and I believe 4210, but my ultimate target was 4200. That's where I was going to take all of my profit. And the reason I had a 4200 profit target on this day trade is because as I was trading it below, 42.47, right before that was 42.50, this also has 50 points to drop with ES. Anything that ES does, SPX mimics. If you are not watching ES, you're going to struggle, okay? Even with SPY. So because ES had a 50-point room to drop, I was comfortable day trading SPX puts here, okay? I entered at 42.47. I locked some, I believe, at 42.30, and then the rest at 4200. Okay, so I data traded this all the way through, and this is the 5-minute time frame here, so you can see it was a clean move down to 4200, and this is the 2-minute time frame Oops, this is both the 5 minute. This is on 5-5. Sorry, I keep saying 5-6 when it was 5-5. So this is the 2 minute time frame here on SPX. This is the 5 minute time frame here on SPX. Again, on the 2 minute, look at what it's doing. Okay, it broke 42.47, locks them at 42.30, and it made a move straight down to 4,200 with no stop until this candle right here, which I think is where I exited, or it might have been 10.10. Made a straight move down for 4,200. Very clean move after I locked some at 42.30. The rest clean move down. Now, if we look at this same play on a 1 minute time frame, you are going to see exactly why you should not be trading on the 1 minute time frame with SPX, especially day trading it. Whoops. Okay, now look at how many times it pulls back, pulls back, pulls back, pulls back. So many rejection candles here as it's making its way down versus this movement right here. Price action very clean on the 2 minute. It's a little choppy here on the 1 minute until it hits to 4,200. Both trending below the 9 EMA, but the 2 minute you can see is a stronger trend below the 9 EMA, and when it does retest, it still continues. It hugs the 9-day EMA, retest, 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 and continues down. It isn't until right here where it breaks the 9 EMA, holds above 9 EMA and 21-day EMA, and even then it just retests and then continues back down. But right here is where the trend ends, okay? But personally for me, the reason why I locked at 4,200 is because I was taking this play on ES, 4,250 to 4,200, and you can see that it did pull back and consolidate around 4,200 prior to continuing down on ES. After that, you can continue to scalp SPX on its way down. But this was the cleanest move. You can see even after that, it did get a little bit choppy as it continued to pull back. However, this was the most significant move here, and you can see that even on the 2 minute time frame, very clean. So when you're looking at ES for SPX, pay attention to where your next levels of support and resistance are. If, for example, you're going to take SPX for the gap fill above 42.70 and you see, for example, ES has room from 4,200 to 4,250. That shows you that ES has a 50-point move up potentially, which means that SPX could also move 50 points up, okay? And it could fill the entire gap up or whatever gap that you're watching. So just keep that in mind as you're trading SPX or you're trading SPY. Make sure that you've also charted ES. A lot of people neglect to chart futures. You chart futures the same way that you would chart any stock, any ETF, any index, okay? You chart it. You make sure for futures, for me personally, I only chart highs and lows and psych levels. I don't chart all of that nonsense in between. I just chart 10-point, 50-point, 100-point levels. Those are psych levels to me, and those are where I usually see ES and NASDAQ futures start to bounce or reject, which is why my ES chart looks so clean right now. So make sure you pay attention to ES, see where ES is in comparison to the next level of support and resistance it has on it if you are looking to trade SPX or SPY. So if it's breaking out of 4,200, SPX is getting close to the gap fill, holds 4,200, you enter SPX for the gap fill. Look at where the next level of support is on, next level of resistance is on ES. If ES only has 10 points up, that should show you that SPX could potentially pull back at 10 points up. If ES has 20 points up, SPX could pull back at that 20 points up, okay? So anywhere where ES could pull back, SPX could pull back. Anywhere where ES could bounce, SPX could bounce, so on and so forth. So make sure that you are paying attention to ES when you are trading SPX and the gap fill. And that is another strategy that you can implement. So depending on where your support and resistance levels are on ES, you can potentially day trade SPX in comparison to where ES futures chart is. So those are the two highest probability setups that I take on SPX. It's the gap or wick fills on SPX, high of day, low of day breaks, and then, 3 strategies. If ES is breaking out of a psych level, I like to see if it has room to the upside or downside. If it does, I like to potentially trade SPX, day trade SPX, depending on the movement with overall market and future. All right, guys, so just as a little recap, because I know I kind of jumped around from different points on SPX, I just want to recap everything for you guys. So when you chart SPX, You want to chart it from the 3-year weekly down, top down approach. 5 to 10 point levels are going to be the key levels, and your 100 point levels are going to be your psych levels. On the higher time frames, I usually just chart the 5 and 10 point levels, and then as you make your way down to the intraday time frames, you can chart more in-depth levels. You want to use the 9 EMA as a trend line and stop loss when you're day trading SPX. Always, always, always watch ES futures, and when you're trading SPX and SPY, you trade it in conjunction with the move that ES futures is making. Your entries on SPX are going to be the 1 minute, and you want to monitor this on the 2 and 5 minute time frames when you are trading it. And for SPX, the highest probability setup, highest probability strategy that you can implement, and the one that I recommend if you are just starting to trade SPX, is going to be the gap fill. Okay, if you see that it gaps up or down in the morning, that is going to be your highest probability setup, and I do recommend if you are starting to trade it, you take that. Or if you don't want to trade SPX, you can trade SPY as SPX is filling the gap. SPY could also make the move up or down, whether it gapped up or gapped down. All right, guys, so that's it for today's video. Thank you so much for watching. If you have any questions on the video today, don't forget to comment them down below. If you have any video suggestions, also feel free to comment them down below. Also, don't forget to check out my description box for all my social media accounts so you're not following any fake pages. And I will catch you guys in the next video. Bye.